Hey everyone, welcome back. Ready for another deep dive.
Always.
All right, well, today we're diving into some financials.
Oh, fun.
Yeah, the drill, data patterns, India, LTD, their Q2 results for FY25.
Right.
You sent over a ton of stuff.
You did.
A lot to unpack. Press releases, investor presentations, the whole 9 yards.
Yeah, we'll cut through the noise for you.
Exactly. We're going to find the hidden gems in here, the real story.
I think it'll be interesting.
Yeah, me too. So data patterns, right off the bat, these guys aren't new to the game.
No, not at all, actually.
Yeah.
They've been around over 30 years in the Indian defense and aerospace electronics.
Yes, serious players.
So we're talking, they do everything from radars to communication systems, even some satellite tech now.
Yeah, I was really impressed. I mean, their client list is basically a who's who of Indian defense.
Oh, for sure. You've got the Ministry of Defense, DRDO, you name it.
Yeah, they're working with private clients too, which I thought was a smart move.
It is.
Not putting all their eggs in one basket and all that.
Exactly.
But okay, let's get down to brass tacks. How did they actually do in Q2?
All right, so revenue came in at ours $910 million.
Okay.
Which is down a little bit from last quarter.
Well,
And the same period last year. So, at first glance,
not great.
no, not ideal. But there's a catch.
Okay, I'm listening.
They're saying there was this big product delivery worth bars $275 million
Wow.
that got delayed
Okay.
because the customer asked for it.
Oh, so not their fault necessarily.
Right, exactly. So it's a speed bump, not a total roadblock.
Okay. That makes me feel a little bit better, but still got to wonder how that impacts investor confidence, right?
Yeah, of course. I mean, are they going to be able to get back on track?
Yeah. What are they doing to make sure this doesn't keep happening?
Well, to their credit, they're sticking to their guns.
Okay.
As far as their predictions for the whole year. Still saying 20 to 25% revenue growth.
Wow. So they think they can make up for this delay.
They seem pretty confident. Yeah. It does highlight, though, how these big projects can be tricky.
Right.
Especially with government clients.
Yeah. You never know what could happen.
Exactly.
Okay. So let's zoom out a little bit and look at their overall financial health. How are they doing big picture?
Okay. So this is where it gets interesting. Data Patterns is still a net debt-free company.
Wow. Debt-free. That's impressive.
And they've got a ton of cash on hand over ours. $5,575 million in cash and investments as of September 30th.
That's a lot of rupees. What are they going to do with all that?
Well, they're definitely focused on staying profitable, aiming for an EBITDA margin of around 35 to 40% for the year.
Okay. So playing it safe.
But also ambitious.
Right. Making smart moves.
Yeah, exactly.
Now, I do remember seeing something in the report about some challenges they're facing.
Oh, yeah.
Something about orders coming in slower than they hoped.
You're right. Order inflow was a bit sluggish for the first half of FY25.
Okay.
But they're expecting things to pick up in the second half.
Fingers crossed.
Their order book is still pretty healthy, though.
Yeah.
9,714 million.
Okay.
And they've got a potential pipeline of 20 to 30 billion over the next 18 months.
Oh, wow. So it's not all doom and gloom.
No, definitely not. They've got plenty to keep them busy.
All right. Well, let's dig into that pipeline a bit more in part 2.
Sounds good to me.
We'll see what's driving that potential growth and how they're planning to capitalize on it.
Can't wait.
Okay, so we left off talking about Data Patterns order book and that juicy pipeline of potential projects.
Yeah, billions of rupees worth of potential business.
All right, so let's unpack that a bit. What are some of the key projects they're working on?
Well, one thing that jumps out is their work with radars.
Oh, yeah, they're big into that.
Big time. They just finished delivering 9 precision approach radars to the Ministry of Defense.
9?
Yep, for both the Army and the Navy.
Wow, that's huge.
It's a big deal. Shows they're a major player in that space.
Okay, so they're obviously good at making radars, but are they just assembling parts, or is there more to it?
Oh, no, they're doing way more than that. They've really built up their expertise in radar tech.
Okay.
They design a lot of the key components themselves.
In-house.
Yeah, things like signal processing components, antenna designs, even those transmit-receive modules.
So it's not just a matter of putting together a kit.
Nope, they're creating the pieces themselves.
That's got to give them a leg up on the competition, right?
For sure. Especially those who rely on outside suppliers.
Yeah, makes sense. And this approach isn't limited to just radars, right?
You're right. They're applying it across the board.
Okay.
From electronic warfare systems to communication platforms.
Smart. They're really building up their capabilities.
And they're even looking ahead to smaller, more agile radars for things like UAVs.
Oh, yeah, those unmanned aerial vehicles everyone's talking about.
Exactly. Those are becoming super important for defense and surveillance.
Makes sense.
Yeah.
So data patterns is basically getting in on the ground floor.
positioning themselves as the go-to guys in a booming market.
Love it. Okay, now I got to ask about this whole electronic warfare thing.
Ooh, yeah, that's a fun one.
What exactly does that even mean?
Okay, so imagine like a high-tech game of electronic hide and seek.
Okay, I'm intrigued.
You're using electromagnetic energy to disrupt or deceive enemy systems.
So, like jamming their signals.
Exactly, or intercepting their communications.
Wow, sneaked
Even
and...
creating decoys to throw them off.
Okay, this is getting really interesting.
It's all about using technology to gain an advantage.
All right, I'm hooked. What kind of tech are we talking about here specifically?
Well, Data Patterns has developed these super sophisticated electronic support measures, or
Yeah.
ESM receivers.
ESM.
Okay. Basically, they're like super sensitive ears
Okay.
that can pick up a wide range of signals from really low frequencies to super high ones.
So they can hear everything.
Pretty much, and not just here, they can also analyze.
Analyze.
Yeah, so they can figure out what kind of systems the enemy is using.
Oh, so it's like intelligence gathering too.
Big time. It's called electronic intelligence, or ELINT.
ELINT. Okay, got it.
And these ESM systems are adaptable too.
What do you mean?
Well, they can be used on different platforms.
Okay.
Like you can mount them on trucks or even on UAVs.
So they're versatile.
Exactly.
It seems like that's a running theme with data patterns.
They're not putting all their eggs in one basket. They're developing tech that can be used in lots of different ways.
Smart move. Now, what about this whole satellite thing? I saw they're getting into that too.
Yeah, that's their newest venture, and it's a big one.
I mean, building satellites, that's next level stuff.
It is. They've actually designed and built microsatellites.
Wow.
And they've even launched a complete satellite here in India.
They launched a satellite.
Yep. It's a huge accomplishment. Shows they're serious about becoming a player in the space industry.
So they're going from land to air to space.
They're covering all their bases. It's all part of India's push for self-reliance in these strategic sectors.
Makes sense. Okay, so we've got radar, electronic warfare communication tech, now satellites. It's
Yeah.
a pretty impressive portfolio.
It is, and it puts them in a great position to take advantage of the growth in the defense and aerospace market.
Both in India and globally.
Exactly. They're a real Make in India success story.
Love it. All right, welcome back for the final stretch of our data patterns deep dive. We've covered a lot of ground.
We have, from radars to satellites.
But now it's time to get down to the nitty-gritty, the financial detail.
Numbers.
Exactly. So let's start with profitability. We saw that revenue dip in Q2.
Yeah, a bit of a blip.
But how did that impact their margins?
Well, despite that dip, they actually managed to keep things pretty healthy.
Oh, that's good.
Their gross margin is sitting at 76%,
Wow, still strong.
and their EBITDA margin came in at 38%.
Okay, so they're still making money,
Oh yeah, they're definitely running a tight ship.
which is what you want to see, especially with that revenue uncertainty.
Exactly. Shows they're keeping a close eye on expenses and maximizing efficiency.
Now, everyone always says cash flow is king, so how's data patterns doing in that department?
Well, let's just say they're sitting pretty.
Okay, I like the sound of that.
As of September 30th, they had over Rs. 5,575 million in cash bank balances and investments.
Whoa, that's a serious pile of cash.
Give them a lot of flexibility.
Like what
But-
can they do with all that cash?
Well, they could invest in new technologies,
Yeah.
maybe make some strategic acquisitions, or even reward shareholders with dividends.
Oh, so lots of options.
Exactly. It's a good problem to have.
I bet. Now, I know their cash flow statement also tells a story about how well they're managing their working capital.
Oh, yeah, absolutely. They've
Yeah.
done a great job optimizing their inventory and streamlining their collections process.
So the money is flowing smoothly.
Exactly. And this financial discipline is evident in their balance sheet, too. Remember we talked about them being debt-free?
Yeah, that's practically unheard of in this industry.
It really is.
Uh,
It's a testament to their careful planning and their ability to fuel growth without relying on borrowed money.
All right, now let's talk about those key metrics that investors are always watching. Return on equity and return on capital employed.
The famous ROE and ROCE.
Yeah, can you give us a quick explainer on those?
Sure. So ROE basically tells you how effectively a company is using shareholder investments to generate profits. It's like a measure of how well your money is working for you if you own a piece of the company.
Okay, makes sense. And ROCE.
ROCE is similar, but it broadens the scope to include all capital, both debt and equity. It gives you a sense of how efficiently a company is using all its resources to generate returns.
So higher is better for both.
Generally speaking, yes. Higher ROE and ROC usually indicate a company is using its resources wisely and creating value for investors.
And Data Patterns is doing well on that front.
They are. In FY24, they had an ROE of 15% and an ROCE of 16%.
Not too shabby. I bet their focus on building those complete systems in-house plays a role there.
Oh, absolutely. It allows them to command higher margins and ultimately generate better returns.
Smart move. Okay, but let's be realistic. No investment is without risk. What are some of the potential challenges data patterns might face?
Well, competition is always a factor. The defense and aerospace market is getting more crowded every day, so they can't afford to get complacent.
All right, they got to stay ahead of the game.
Exactly. Another potential challenge is their reliance on government contracts.
Oh, yeah, that can be tricky.
And it can? A big chunk of their revenue comes from government orders, which can be subject to budget cuts or changing political priorities.
So spreading their wings and diversifying their customer base could be key to their long-term success.
Absolutely. And that includes looking at international markets.
Right, which has its own set of challenges.
Definitely breaking into new markets is tough, especially when you're up against established global players. And then there's the whole regulatory maze that comes with the defense industry, export controls, security protocols, all that fun stuff.
Sounds like a headache.
It can be. But despite these challenges, there's a lot of reason for optimism.
Okay, I'm all ears.
The global defense and aerospace market is projected to grow significantly in the coming years, fueled by things like rising geopolitical tensions, modernization programs, and the increasing adoption of advanced technologies.
So data patterns is in the right place at the right time.
It seems that way. They're riding a wave of growth, and their focus on innovation, their Make in India commitment, and their expanding global footprint all position them well for the future.
It's an exciting story to follow.
It is. They've got a lot going for them. Strong financials, a clear vision, and a knack for adapting to the ever-changing landscape.
All right, so let's wrap this up. What's the key takeaway for our listeners today?
Well, we've taken a deep dive into Data Patterns' Q2 FY25 results, and what we found is a company that's performing well. They had a little hiccup with revenue, but they've maintained strong margins, and they're generating tons of cash. They're investing strategically in growth, and they're committed to making a positive impact. It's a compelling story of innovation and ambition.
And as with any investment, there are risks to consider.
Of course, competition, regulatory hurdles, the ups and downs of the market. But Data Patterns has a track record of success. They're thinking ahead, and they're striving for excellence. That makes them a company worth keeping an eye on.
Now, before we go, we always like to leave our listeners with something to think about.
A little food for thought.
Exactly. So here's a question. Data Patterns is betting big on building complete systems in-house. How might this impact their reliance on foreign suppliers and their overall competitive advantage in the long run?
That's a great question. It'll be interesting to see how that strategy plays out.
It will. And on that note, we've reached the end of our deep dive into Data Patterns. We hope you enjoyed the journey and learned a thing or two about this fascinating company. Thanks for listening, and we'll catch you on our next deep dive adventure.